and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed on the show later. But before bringing our guests on board, let's see what the global handover looks like. A mixed close on Wall Street, but the Nasdaq surges led by a 6% rise in Tesla. The Dow and S&P 500, however, closed lower. Stocks in Europe continue to rally. Markets hit levels last seen in May 22. Stocks in the Asia-Pacific drop off after a strong start. The SGX Nifty also indicates a muted start for the Indian market. Will markets recovery remain choppy? We try to find out on the show today. Also in focus are TCS, Tata Motors, Sona BLW, Suven Pharma and Safari Industries. All right, let's bring on board our first guest on the show. Mr. Sanjeev Bhasin of IIFL joins us right now. Morning, Mr. Bhasin, and thanks for taking time out. I was watching your interview online a few days ago where you had stated that you expect Nifty to hit 19,000 before budget this year. So talk to us about the big triggers that you're identifying and whether on that way to 19,000 we should expect some more wild swings, some more choppiness and volatility.
Yeah, good morning. Karunya, wish you a very happy new year. When you caught one of the adages and you really put the onus on me, 19,000 now seems, but yes, take it with a pinch of salt. See, Karunya, there are three things which have changed. There is a huge global rally which is taking place. Bond yields have peaked out. The dollar is not even going past its previous, supports of 105. And that is what is letting the cat among the pigeon. I think that emerging markets, even though have been volatile, India has actually underperformed the global indices. The European indices have got off to the best start since 2009. The Hang Seng index is up 40% in the last 3 months. The Kospi, I can go on. It tells us that the markets had grossly got oversold on fear and, gas, oil, all the gamuts which are negative. Now all that is coming back to place. In the Indian context, I definitely think that we are headed past 18,500 and that should come maybe this week or the next. But we think that there will be a shot at the previous highs of closer to 19,000 before the budget. Already you are seeing inklings of positives coming out from the rumors on the budget and so on capital gains and on limit on the exemption limit and so on. So I think that corporate results, we saw TCS actually deliver better than what was expected. And not sounding at all cautious, in fact, sounding relatively optimistic. So I think results will be the key trend maker. And I'm bullish with a view of 18,500, 18,700 coming maybe in the next week or 10 days.
Okay, well, that will in fact be a very significant level to watch then. Mr. Bhasin, you were talking about earnings and yesterday we saw TCS kickstart the earnings season for the quarter gone by. So not just for IT, but overall earnings trajectory, how are you sort of penciling in? What kind of performance and outliers are you penciling in for Q3?
So, Karunya, firstly, I think autos will be in a very sweet spot. Input costs have fallen. We think autos, banks will be the best play because their liability franchise has held out well and the lending rates have gone up. So their NIMs and the asset quality will be very, very strong. Already you've seen PSU banks lead from the front. We think some of the real estate names, as a disclosure, DLF, Godrej are two stocks which we are accumulating. We think their numbers, because sales have been far ahead of the estimates. Some of the travel and tourism, Indian Hotel, Indigo, they will report numbers. And maybe metals come out with relatively, stable numbers. After the margins will be little affected, but the EBIT will be strong. So I think consolidated, you will see strong numbers from the entire large cap basket. And if we are looking at 1 year forward on 1,100 rupee earning, then 17 times 1 year forward becomes relatively not all that expensive. And remember, this market is going on the back of not global but local liquidity, and that local liquidity is here to stay.
Okay. What about valuations? Because a lot of analysts and even global brokerages have stuck their neck out and talked about challenging valuations of Nifty. So at, around 18,000 levels, what is it that you think about the valuation scenario?
Well, it's a glass half full, half empty. If you miss the bus at 16,000 at 18 and a half, you don't have the guts to say that the Indian market is going to go higher. So, it's a left out feeling. I agree the Indian markets are expensive, but they will remain, Karunya, because the driving forces is the adoption of an asset class called equity by the Indian households. When did you see the asset under management grow like it has, and the amount of demat accounts and the amount of new accounts on SIPs opening? So that is here to stay, not for the next 3 months, 6 months, but for the next 10 years. We will be an expensive market, but I think that we will have to live with that. So the volatility will be key, because people will take money off, some chips off India, go to China and so on. But I'm a diehard India bull and I continue to remain bullish. Like you said, valuation. So then take the cursors, Bajaj Finance was expensive at 8,000. At 6,000, just because of 1 month guidance, it doesn't alter the pace of the largest NBFC, which has been the greatest wealth creator. We think this 6,000 level is giving you a lovely entry opportunity. Muthoot Finance will be another key where you see gold prices are almost at new highs. And in the Indian context, collateral risks goes much lower when gold prices rise and the margin of lending goes higher. So Muthoot is a very good example of accumulation. It's the largest gold lender having 60,000 crores under AUM. And like I said, DLF Godrej properties are two real estate plays which in this correction should be accumulated wholeheartedly.
Okay, all right. And just for the benefit of our viewers, a lot of comments are coming in on our live feed about TCS earnings. Do you think they were a mixed bag, or are you largely okay with the performance that they've delivered? It's mostly in line with what you were expecting.
Karunya, in the last 4 years, they've done 2 buybacks. They've given you bonuses. They've given you an exceptional dividend. Take it with a pinch of salt. In a global environment, here is a behemoth which is still standing proud. So I think there is no question, if you want to be in a blue chip, then TCS is the only way. Now, expecting it to keep delivering over a valuation parameter is not possible. But it is a bellwether which must be in everyone's portfolio. Now, whether you buy it at 3,300 or at 3,000 is immaterial, because this stock is only a wealth creator if you have held it over the years. And I think that will be the case for a large number of IT stocks. However, as a disclosure, we think 3 stocks, HCL Tech, Tech Mahindra and Persistent, on valuation and on future guidance are worth accumulating. But if you have a longer term view, then please buy a ETF on technology or some mutual funds which have a basket of stocks. They will perform better.
Okay. But overall for IT, I mean, would you recommend somebody to lap up at these levels given the consolidation we've seen over a long period of time in the tech space? Or is it better to stay invested in stocks and in companies which are more domestic oriented right now?
Yeah, so that's an argument worth going for, which we know that the Nasdaq is, hit all time, almost 2-year lows. Meta, Microsoft, Google, Apple, all are trading at, I think that US basket is looking very good. And in the Indian context, remember AI and cloud computing are the new verticals which are doing extremely well. So if you have the wherewithal to sit through the volatility, maybe for a quarter or so more, then these stocks are giving you a brilliant entry opportunity. But Karunya, like I said, it depends on your vision. There are a lot of other sectors, say housing, say real estate, say banks, say metals, which have a higher beta and which can move faster. But I think there is enough value in IT. And if you are selective and do a good ETF flow or good mutual fund, which has a presence of some of the basket of stocks, you will be happily laughing your way in the next 6 months.
All right. And on that optimistic note, thank you so much, Mr. Bhasin, for joining in and for sharing your thoughts and observations of the market with us. Let's shift gears and talk about the technicals of the market. Kunal Shah joins us. He's from LKP Securities. Good morning, Kunal, and thanks for standing by. Want to understand the trade setup and what are the important levels to watch today and perhaps for the rest of the week on the benchmarks?
Karunya, first of all, Happy New Year to you and the entire Moneycontrol team.
Wish you the same.
Firstly, to start with the index front, Nifty yesterday saw some good bounce back from the lower levels. We didn't start 2023 with a very good note. There was selling pressure from the early days as well. Yesterday, we got some relief looking back at the US data and the US rally, what we got. Now, if I look on the lower pace, we have seen a good support at 17,800, 900. This has been the base case where good amount of buying has been seen. Now, follow-up move is very much necessary. Yesterday, we tried to surpass that 18,200 mark, but from there onward, we saw some selling pressure towards the day's end. So I think 18,200 is a critical resistance for us. Once that is taken out, then we are ready for 18,500 on the upside. Overall, the trend remains positive. The index is likely to be volatile for the next 15 days or so. Two reasons for that. First, we are kicking off with the earnings seasons. Second is we are going to go towards the budget. So there is going to be a lot of volatility in the index front. You will get opportunities on both the side, that is on the buy side and on the sell side. Specifically, if I talk about today's trading session, the first 15 minutes will be very important. If we sustain above 18,100, then we might see a continuous move towards 18,200, 18,250 on the upside. And above that, if we sustain throughout the day, then 18,500 is open on the upside. And similarly for the bank Nifty as well, it's actually struck in a broad range where 42,000 is my support and 43,000 is my resistance. Even if I look at the options data, 42,000 put writers are very active and 43,000 call writers are also very active. So I think bank Nifty is likely to consolidate. Again, in this consolidation range, I'm expecting a buy on dip approach. 42,400 should be my immediate support on the downside. I'm expecting upside levels of 42,800 to 43,000 on the upside.
Okay, all right. Let's talk about some stocks in focus. And of course, the first obvious name on the list is TCS. How do you think it will open today?
So if I talk about TCS, it has been quite volatile since the last 2 to 3 trading sessions. If you look at Friday's trade, the stock was down by 2.5%. If I look at yesterday's trade, it was up by 2.5%. So there is volatility before the event which was there. Now the results have been posted. Now for TCS to move higher, it has to cross the level of 3340 and sustain above it. Once it sustains above that level, we will see gradually TCS moving higher towards 3400. So for me, again, the opening will be very important. A sustainable move above 3340 will take the stock higher towards 3,400, 3,420 levels or so. So for me, I will wait for the opening 15 minutes or 20 minutes. If those levels are sustained, then the rally could go on the upside.
Okay. All right. What about Tata Motors? We have JLR's numbers for the month gone by also coming in, wherein it's reported a 15% year-on-year rise in its wholesale volumes, a good 6% growth sequentially as well. In fact, retail sales were also up 6%. However, sequentially, there was a bit of a downtick there. They have an order book of more than 2.1 lakh units. Now, Tata Motors has been sub 400 levels for the last couple of weeks. Any chance of a bounce back to the 400 mark and beyond anytime soon?
Karun, if I talk about the entire auto space, firstly, auto space had a very good run up last year where there were top 2 performance were Mahindra and TVS Motors. Whereas if I look at Tata Motors, it has been subdued since the last 1 to 2 months or so. Now, looking at the current levels, the stock is already trading in an oversold territory on the technical fronts. The RSI is also around the levels of 40, which is about to be coming out of that oversold territory. So for me, from the current levels, the risk to reward ratio is definitely on the long side. One needs to be definitely taking long positions. The lower end support, what I see on the stock is at 380, 375 zone. Now, this has been the zone where the stock had previously also seen some bounce back. So I think a good demand zone is there over there, and we are seeing some bounces from those levels. So I can expect the stock to go towards the levels of 400, which is its first hurdle. And once 400 is taken out, then we will see the stock zoom towards 420 kind of a level. So I think a good risk to reward ratio, buy on dip approach, even at the current levels, the risk reward is very good. So one can take a position with a stop loss of 380 and look for targets of 400 to 420 on the upside.
Okay, all right, point taken. Moving on to the next stock on our list for the day, and that is Sona BLW, another name from the auto universe. They are looking to acquire 54% stake in a Serbian company called Novelic. They're essentially, through this acquisition, looking to grow in the area of autonomous and connected vehicle technologies. Sona BLW, again, what a fantastic returns they generated when they listed on the buses, and even for a prolonged period of time thereafter. But of late, Sona has been a bit of a quiet, quiet participant in the auto index and the auto universe. So talk to us about what's the likely way forward for this.
So if I talk about particularly Sona Comms, since December, we have seen a massive correction in the stock. Almost from the level of 800, the stock has come down to 400. So you can say it has corrected by almost half over here. And now the stock is definitely showing some kind of momentum on the charts. We are seeing some base formation happening at the lower levels. But the problem for me is there is no volumes in that base formation. So I'll wait for volumes for my confirmation over here at the current levels. It's not a level where one should already sell their existing position over here. I think it's a wait and watch situation what we are having over here. For me, the stock needs to surpass the level of 440. Once that is taken out, then we might see a good momentum towards 480, 500 levels or so. And I can say a good base formation has already happened over there. So I will wait for that level to come in, and then probably I will take a trade on Sona Comms.
Oh, okay. All right then. What about Suven Pharma? They've received an open offer from Cyprus-based companies to buy a 26% in Suven Pharma. The companies Berhinda Midco and Jusmiral Midco, they have made an open cash offer to acquire close to 6.6 crore shares of the company for 495 rupees a piece. Very close to where the stock shut shop yesterday. Now talk to us about Suven Pharma and how the technicals are likely to play out.
So if I look at Suven Pharma on the technical charts, I think the long-term charts, if I look at it, has been a major wealth creator. Now in the recent past, the stock has been consolidating in a broad range where it is facing multiple resistance around the zone of 503, 505. These are the kind of level where it has been facing a lot of hurdles. So for me, that level needs to be taken out. Once that is taken out, we will see some short covering moves coming there as well. Then the stock might head towards 560, 600 levels. So currently it is trading around 494. After that deal, what had happened earlier, the stock has been consolidating in a very narrow range. So for me, there is no such trade or setup at the current moment on the technicals. I will wait for that 503, 505 level to be taken out. Then I will say the stock is ready for 560, 580 on the upside.
Okay. The final stock on our list as far as stocks and news is concerned is Safari Industries. They've commenced additional commercial production at their Halol factory, which is located in Gujarat. The effective production capacity has increased to 3 lakh pieces per month, and the total capacity of the overall Safari group has reached 5.25 lakh pieces a month. Safari Industries has started off the year on a decent note, but if we look at the last 2-3 months trajectory, it has been largely range bound. Now tell us what's likely to happen from these levels. Is it going to be range bound still for the foreseeable future, or do you expect any meaningful action here?
See, I think if I talk about Safari from the last year, July 2022, the stock was trading around 900 levels and it went up to 2000. So there was a very good rally in the stock what we had got. Now after that rally, post that the stock has been consolidating in a broad range as you mentioned. Now the stock is ready for the next up move on the upside. The chart looks very good. I think definitely a very good bet on the long side where you can take in. 1760 is the immediate hurdle what it has. Once that is taken out, then the stock is ready to go towards its all-time high levels as well. So definitely it's a buy candidate from the current levels. A very good risk to reward opportunity also you are getting at the current levels, and long term the weekly and the monthly chart looks excellent at the current levels where you are getting a very good risk to reward ratio.
Okay. What about Tata Steel? I want to address some of our comments and queries as well that are coming in. Nishad is asking if Tata Steel is likely to stay on that upward trajectory. We've seen a good bounce coming by last 2 weeks, adding about 10-15 rupees on the upside. Tell us what lies ahead.
So, Karuna, if I talk about the entire metal space, the rally started in the last 10 days on the news of the China opening up. So that is where the metal stocks started to gain momentum. And Tata Steel was one of the stocks which had been performed for the last 5 to 6 months or so. Now, I can see the stock has formed a very strong base, and I think this China opening up theme is going to play a very good support for the entire metal space as well. And Tata Steel being one of the top weighted stock on the metal space, I think the momentum is still likely to continue. Already the stock has seen some rally, so if you get any dip of around 2 to 3%, would be an ideal opportunity to initiate longs. But even if those who are holding long positions in Tata Steel, I think the stock can go towards 130, 140 levels on the upside. So I think still the steam is left for the entire metal space. And specifically, if I talk about Tata Steel on technicals, it looks very good.
Okay, all right. Moving on then to the next query, and Vijeta Arvind is asking about CESC. Now again, CESC, if we look at the last 1.5 to 2 months returns, completely flat. Talk to us about the way forward. Will it stay sluggish at these 75 odd rupees levels?
See, I think if I look at the overall chart of CESC, it has been trading in a complete downtrend. Lower high, lower low formations are in fact, so definitely the trend is on the downside. Weakness is clearly seen, whether it's on the weekly or whether it's on the daily chart on the technicals. The RSI is again entering into that sell region of 30 to 20 zone. Negative crossover is there. So I think definitely the stock is looking weak. The stock can go down towards the levels of 70 to 68 on the downside. So for me, it's an avoid, or even if you are holding long positions, one should exit, because I can expect still a 6 to 8% fall in the stocks from the current level.
Okay, Satish Kumar is asking how National Fertilizers is likely to perform in the coming days, and of course it's a very topical question because typically ahead of budget you see agri and fertilizer based stocks reacting usually in the positive way. So talk to us about this one specifically, National Fertilizers.
If I talk about currently the entire fertilizer space, it's not only national fertilizer, whether it's RCF, whether it's FACT, everything has been buzzing a lot since the last 1 to 2 months. The entire fertilizer space has given a spectacular rally over here. Now, specifically, if I talk about NFL, it had already given a strong breakout, and after that breakout, the stock witnessed some correction because the markets corrected. Now, after that correction, the stock has been consolidating in a sideways territory. The chart looks very good on the weekly and the monthly perspective. This is just a consolidation what we are having. So for me, if you want to take an aggressive bet, I will take above the level of 77. So 73.5 it's currently trading. Once that 77 hurdle is taken out, the stock is ready to go towards the levels of 90, 95. So I think even if you are holding positions on NFL, continue to hold on. The chart looks very good. If somebody wants to initiate fresh positions, wait for that level of 77 to be taken out. Once that is taken out, the momentum will be very fast towards that level of 90, 95.
Okay, all right. Could you also share any notes or any observations on Zomato, given the limited historic trend? Mohit is asking us about the prospects for this one.
See, I think if I talk about Zomato has been trying to form a base on the lower end since the past 1 to 2 months. But what has happened once the base has been formed, there has been no follow-up move on the upside. So we are seeing no specific volume-based action on Zomato from the current levels. But yes, if somebody is holding it right now, then definitely one should hold on to their positions because it is trading at a very critical support zone. And if again somebody wants to initiate a fresh position, I would suggest to wait for that breakout about 60. So 60 has been a short-term resistance for the stock. Once that is taken out, the stock is likely to go towards 70, 72 on the upside.
Okay, all right. Virat is asking your view on Indian hotels. Now, this one also last 2 weeks has seen a good recovery from sub 300 levels. Right now perched at 314. What do you think? Should one buy at these levels?
Definitely, if I look at the entire hotel space, I think last year it was the entire hotel industries which saw a sharp rally because of that post-COVID effect, where we got the hotels which were opened up. Now, post that, once the rally was done in Indian hotels, it has been consolidating since October 2022. So almost 3 months the stock has not given any returns. It has been consolidating in a broad range. Finally, we are seeing some sort of buying since the last 3 to 4 days or so. The stock has seen some buying momentum from the lower levels. A base has been formed around 295 to 96 zone. So I think current levels, one should definitely initiate long positions. 295 to 96 is my support. I can expect the stock to go towards the levels of 337 on the upside.
Okay, all right. Moving on to our next query coming in from Vijay. He wants your advice on Tata Power.
If I talk about Tata Power, firstly, Tata Power has been consolidating again in a very steep range. If you look at the stock performance, the sharp rally from a two-digit figure to a three-digit figure, that is from the level of almost 40-50 rupees, it went up to 300. And post that, once the rally was over, the stock has been consolidating in a very big range where 266 has been a resistance zone, and on the downside 200 or so 195 levels has been a support, and the stock has done nothing. For me, volume matters a lot on technical front, where on the lower end volumes are not seen from the current levels as well. So the base is formed at 194 195 levels, so as long as these levels are held, one should not exit their position. And again, for initiating of a fresh position, it should surpass its recent swing high, and that swing high is 212. Once that is taken out, the momentum will come back towards the levels of 230 to 40 levels on the upside.
Okay, all right. Kamalaja is asking about Jubilant Foodworks. Now, this stock has wiped out around, in fact, more than 100 rupees last 2 months. Do you think sub 500 offers a good opportunity to enter, or should one stay cautious?
So if I look at Jubilant Foodworks, the stock has been trading in a sharp downtrend. Lower high, lower low formations on the technicals are clearly visible. I can see the stock going towards the levels of 465 on the downside. So I think definitely a weakness is visible on all the parameters, whether it's indicators or whether it's on the candlestick pattern. So I think yes, avoid at the current levels. Even if you are holding long positions at the current levels, I can still see the stock go down by 5 to 6% over here. So no need to be aggressive at the current levels. Wait for the stock to see some momentum, then only fresh positions can be taken.
Okay. Yash is asking us about Schneider Electric, and it's seen a good 10% added in the last 4-5 sessions itself. Can the trajectory sustain?
Yes, definitely. If I look at the Schneider Electric chart, I think the chart looks very good. It has been trading in a strong uptrend with a higher low formation, which has been intact on the chart perspective. So I think the rally, what we had seen in the last 10 to 15 days, the stock is now on the verge of a breakout, and that breakout level is 187. Once 187 is taken out, we will see the momentum continue. So even at the current levels, one could buy any dip if you get. That would be an ideal opportunity to enter. The actual momentum on the upside will start about at 187 zone. Then the stock can go up to 220, 230 levels as well.
Okay. Funny had bought Hindustan Aeronautics for had sold Hindustan Aeronautics for a profit last month, and he's asking if it's a good time to re-enter and buy again. Now, of course, we don't have to get into how much returns PSU stocks, most of them have generated over the last 6-7 months, but off late they have been a little weakish. Do you think this is a good opportunity to buy, or do you think that the dream run that PSU saw could have come to a halt?
So, Karun, if I talk about PSUs, I will categorize into two things. First is the PSU bank space. Second is the PSU defense space. So this comes under the defense space where we had seen a very sharp rally on all the defense counters. Now, since the last 1 month or so, we are seeing some profit booking which is happening at higher levels. The defense stocks are not able to sustain the rally. So I think there is some weakness still left into the stock. I think the stock can come down towards the levels of 20 to 50, 2300 zone. And I think that would be a very good opportunity to initiate long positions. So I think still it's in a wait and watch situation. Let that 2300 mark come in, and then probably you can add on to your long positions.
Okay, all right. Guys, unfortunately, that's all the time we have to address your queries. I mean, lots of comments coming in, but perhaps tomorrow you can come back in and we can talk about those stocks. But Kunal, before we let you go, I want to get in your top picks for the day as well.
So firstly, my topic for the day, first stock would be Reliance. I think what the rally, what we got in Nifty last time, Reliance never participated in it. And now if Nifty has to go higher and surpass that 18,200 mark, what we discussed at the start of the show, I think Reliance will now have to perform, and that is clear cut visible on the charts. Yesterday, the stock has given a falling trend line breakout on the technical charts along with volumes. The momentum indicator RSI has given a positive crossover as well. And I think that the stock is ready to go towards the levels of 2650, 2700 on the upside. So I think a very good bet you are getting at the current juncture where 2540 should be a very strong support, which should act as a cushion for the bulls. And I'm expecting the stock to go towards the levels of 2650, 2700 on the upside in the very near term. Second stock on the long side again would be from the auto packs. I think there are selective stocks on the auto space which are doing well. And for me, my pick will be Mahindra and Mahindra. As we had mentioned in the show, it has been one of the best outperformer in the entire auto space as well. Yesterday, the stock has again given a breakout with sharp surge in volumes. The stock was consolidating in a broad range, and yesterday, finally, that range was taken out with good amount of volumes as well. So Mahindra and Mahindra is ready to go even higher from the current levels, expecting levels of 1350 to 1370 on the upside. The lower end base, what I see is 1270, which should act as a good support on the downside for Mahindra and Mahindra.
Yes, the two heavyweights, Reliance and Mahindra on Kunal's list. Thank you so much for joining us once again, Kunal. With that, it's a wrap on Morning Trade. Thank you for watching.